Absolutely.
Yes. And if I may, let me tell you a little bit about Stephen Bigelow. He's with Candlestick Forum, has 40 plus years of investment experience, including 8 years as a stockbroker with major Wall Street firms. So we won't hold that against him, though. He holds his business and economics degree from Cornell University. He's the author of three top investing books that teach trading with candlestick patterns. And he was one of my first mentors when I began trading. Oh, Steve, I think it was 2004-ish. I'm not sure, but it's my pleasure to introduce you to Steve. We're going to get him up and running while Raleigh tells you what he's going to present on today.
Absolutely. Well, Steve is going to be talking about identifying power trades with candlesticks. He's going to be sharing high probability trend identification signals, the most powerful confirmation indicators, and strategies that take the guesswork out of trading. And with that, it is our pleasure to have Steve Bigelow join us this afternoon. Steve, how are you doing?
Doing great. Can you hear me all right?
We can, and we
All right.
see your vast collection of collectibles behind you.
Ah, yes. As you can see, I've straightened up the room for this.
I-
Um,
yeah, this is tidied up. Well, we're gonna go offline here, but we'll be here if you get stuck. So take
okay, are
a
we,
there.
can you see my screen?
We
Yes.
can.
Okay. All right. Well, welcome everybody. And thank you for the invite today. I'm going to do a session on power trades. And power trades and candlestick analysis is just very simple. It's what we can do to dramatically improve the probabilities of a correct trade result and also enhancing the high profits of that trade. So if you're learning candlestick analysis, there's 12 major signals. Now there's 50 or 60 candlestick signals, but you only need to learn the 12 because that's the ones that are going to produce all the trades for you. Beyond that, there is the major patterns. There's about 6 or 8 of them. And the reason they're relevant is because human nature works the same way time after time. And that's basically all candlestick analysis is a study for hundreds of years now by the Japanese rice traders to show you signals that there's been a change of investor sentiment. You combine those two and we got what we call top rank signals and patterns. But what makes them all extremely strong is adding indicators that improve the probabilities of those signals and patterns working. So the Japanese rice traders just have common sense put into graphic depiction. Basically, where do most people buy? They buy exuberantly at the top. Where do most people sell? They panic sell at the bottom. Fortunately for candlestick analysis, you can start seeing when that selling is over and the reversal signals showing up. So the 12 major signals are these, and we'll see some of them as we go through. But if you just learn the 12 major signals, there's 6 longs and 6 shorts. And what the Japanese rice traders provided for us was not only the graphics of the reversal signals, but they explained what the psychology of investor sentiment was that created those signals. And once you learn that, you basically have the same grasp on price movements as somebody that's been trading in the market for 50 years. So, for example, this is what we call a cradle pattern. There's expectations of a cradle pattern. The cradle pattern is the headboard, the flat bed, usually consisting of a bunch of dojis. Again, the dojis is one of your predominant candlestick major signals. It's where the bulls and the bears are indecisive. And then there's your footboard. So there's your cradle down between the two trends, and this is the expected results coming out the other side. Now, the other next question is, well, how long do you know how to hang on to this trade? And there's a very simple parameter. This line right here is what we call the T line. And that is part of a very powerful group of confirming indicators because the graphics, the candlestick signals, is merely the identification of what investor sentiment is doing at specific levels. So here's a very simple concept that makes power trades that much more effective. If there's one good confirming indicator at a candlestick reversal signal, that improves your probabilities. But it even becomes greater probabilities if you can see 2, 3, or 4 confirming indicators that are all enhancing that reversal. So here's the most powerful candlestick confirmation that is out there. It's what we call the T-line. It's the 8 exponential moving average, and it's got Fibonacci characteristics. It acts like a natural support and resistance level of human nature. So this is my most powerful screen, or my most powerful statement when it comes to candlestick analysis. If the candlestick signals are the graphic depiction of what's going on in investor sentiment, and the T-line acts like a natural support and resistance level of human nature, when you combine those two, you have an extremely powerful trading platform. So there's a very simple T-line rule. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. Conversely, if you see a candlestick sell signal and a close below the T-line, you can stay short until you see a candlestick buy signal and a close back up above the T-line. And there's a caveat to that. The further away you move from the T-line, the higher the probability the price is going to come back and test it, which means if we start seeing sell signals that far away from the T-line, we have a very simple trading program. You go to your 10-minute chart and see what's happening on the 10-minute T-line. Now, the reason you can go to your 10-minute chart is because a candlestick signal is the graphic depiction of everybody buying and selling during a specific time frame. That time frame could be 1 minute, 5 minute, 10-minute, or daily, weekly, or monthly. But here goes back to that simple analysis of human nature. Where do most people buy? They buy exuberantly at the top. And how could we tell that from candlestick analysis? You can see how the T-line acted like a support level, and this was Tesla a while back. And then what was happening up here in the overbought area? They started gapping it up. Then they started moving it up big. Then they gapped it up again. And look how far away you are from the T-line. So if we use the T-line rule, you can stay long until it closes back below the T-line. You would have given up a lot of profitability here. That's why you go to the 10-minute chart. And again, the further away you move from the T-line, the faster you can take profits up here well above where the rest of the profit taking is going to occur. Same thing on a in a downtrend. If you're short, you're heading all the way down here to a support level in the oversold area. Again, where do most people sell? They panic sell at the bottom. Everybody always says, where do you grab for a fallen knife? The candlestick signals tell you when there's a change of investor sentiment. So notice how the 200 and the 50 act as indicators. That's why we have the 200 and the 50 on our chart. We also have the 34 EMA, which works fairly effectively. And sometimes we have the 20 when a trend is consistent. But the reason we have those moving averages on our charts is not because we're using them to make decisions about our trades. We're using them to see what everybody else's decisions are. The 200 and the 50 are the moving averages that every major money manager around the world uses as their decision-making process. They act like support and resistance levels. The advantage for the graphics that candlestick signals is we can see when there's multiple reasons for buying. For example, there's our bullish hammer harami on a pullback in the oversold area. And then there's our best friend signal, gaps up. Then we can see what's happening here, a scoop pattern, because there's our flat handle, there's the scoop, and what's amplifying the scoop pattern? The fact that we stopped the downtrend with indecisive trading, and they started gapping it up, doing the best friend signal. And the best friend signal is merely a doji followed by a gap up. You add that to the fact that the stochastics are starting to move up, and we know what to expect coming out of a scoop pattern. a slingshot effect. Notice how it started trading up above this level. And then how long do you hold on to this position? Until you see it move too far away from the T line, you get ready to start taking profits. So I always emphasize that you don't, this is not rocket science. This is merely identifying what the Japanese rice traders have identified as what our trend and reversals are doing. And again, the more pieces of information we can put on our visual analysis, the higher the probability we're in a correct trade. So that's where we can use other indicators, like a piercing signal right smack dab on the 50. They gap it up, confirming the piercing signal, one of the 12 major signals. And so what is it telling us right in here? That the 50 is acting as support, the T-line's not acting as resistance, and they broke through this level. We can pretty much see we've got a wave 1, wave 2, wave 3, and how long do we hold this? Look how far we started, or how far away we started moving away from the T-line, and then we saw a bearish signal. This is called a bearish left-right combo, a doji followed by a bearish engulfing signal. Where was the next logical target? Back here to the T-line. So this is where we start taking profits. Why would, excuse me, why would we be alerted to take profits up here? Because look what they were doing in the overbought area. They were starting to gap it up, that enthusiastic buying. So anytime we can see a signal, there's a Morningstar signal bouncing off the 50, closing above the T-line, stochastics in the oversold area starting to come up. If they start trading positive the next day, that tells us everything's confirming we're in a high probability trade situation. The more pieces of evidence that we can put into our analysis. Caterpillar doing a long-legged doji, hammer signal, bullish confirmation, where? Right smack dab on the 50. What can we assess from that? That everybody that was going to be buying Caterpillar was buying as soon as they saw it was supporting at the 50. Fry pan bottoms are one of your major patterns that have a very effective, profitable results. Looks like a fry pan bottom. And then notice what else we can add to it. Look how it was kind of supporting right here on the 50 and staying above the T line. And this is a very simple analysis. I should go backtrack. That the stochastics I use is 1233. We want to be buying the signals when stochastics are in the oversold area. But usually on a pattern breakout, the stochastics are going to occur when you're up in the overbought area. So here's everything we can add to our visual analysis. What do we expect coming out of a fry pan bottom? Or what can alert us that the fry pan bottom is working? Exuberance breaking out through the beginning of this pattern. There's our best friend signal, one of your strongest bullish signals. The gap up through the beginning of the pattern. What'd that tell us? That told us this pattern was working. We have prospects of a very high profit trade. On the other hand, if we can see where everybody is watching to see if it's a resistance level, look at our shooting star doji and then a gap down the next day. That told us that the reversal had occurred because of that signal confirming, and look where it closed, below the T line. So not only did they fail at the 200-day moving average, but the gap down told us exactly what we would suspect on a reversal, is that the bears are now in control. And not only are they in control, when they gapped it down, it told us that people were trying to get out of this position with great speed, selling it off. So again, everything we look at is visual. We just have the advantage of seeing what's happening with investor sentiment exactly at levels that everybody else is watching. There's our bearish left-right combo, failure at the 50. How long do we stay short on this one? If we start shorting, has it closed below the T line? Until we see a buy signal and a close back up above the T line. The kicker signal is one of the ones that creates the strong power trades because the kicker signal has a gap built into it. It opens here and closes here. And they gap it up and go the opposite direction. That basically tells you investor sentiment has been kicked in the bullish direction. Then you can add features that enhance that. Notice where they gapped it up. They gapped it up through the 50. They gapped it up above the T line. How long do you stay with this one? Until you see a sell signal and a close below the T line. That was Oracle. And those are signal enhancements that we can add to our analysis, which is if we see a pullback, again, there's a very simple trading phenomenon of human nature. If they break through a resistance level, they usually come back to test it, see if it's going to act as support. This is one of your strong candlestick reversal signals. There's your morning star signal. It's a big down day with a day of indecision and a bullish candle that closes more than halfway up this candle. An added feature to this morning star signal was we could see that it bounced right smack dab off the 50. And it closed above the T line. The next day it did a doji, followed by another bullish candle. This is called a doji sandwich. So when you have the combination of a morning star signal where you expect more upside, and you have a doji sandwich, which the expectations are more upside, when you combine that morning sandwich or your McMuffin, you've got double enhancement as far as the probabilities you're heading up from that point. So again, the more we can add into our analysis, there's our best friend signal in the oversold area, gapping up through the 50, through the T line, and through this perceived resistance level. Where do you think our next target's going to be? We'll watch to see what happens up here at the 200-day moving average. Raleigh, forgot to mention that if anybody has questions as we're going through this, don't be afraid to ask questions. And if you see them, Raleigh, yell them out to me.
Sure, Steve, when you get a chance, there are several questions that came in just once again asking, what the various lines on the chart are. So
Okay.
as you're comfortable covering that, that's one thing that came up.
Okay. The blue line is the 50-day simple moving average. The red line is your 200-day simple moving average. The reason we have those on our charts is because every major money manager around the world uses those moving averages to make their decisions about their portfolio. A lot of people say, well, why don't you use the exponential? Isn't that a little bit better? And the answer is we're not using these to make our decisions. We're using these to see what everybody else's decisions are. The black line is the T line. I could take everything off this chart except for the candlestick signals and patterns, or the formations themselves, and the T line, and I could trade very successfully. Again, the combination of the candlestick signals, which are the graphic depiction of what's going on in investor sentiment, and the natural support and resistance level of human nature, that combination by itself is going to make you a lot of money. And it will keep your emotions out of your trading, because back before the T line came along, I might close out a position here thinking, all right, that's probably time to take profits. But now I know to hang on to this position as long as we don't see a close below the T line.
And Steve, there was another question that says, is the T line, is it, time sensitive? I mean, does it only work on daily charts, or can it work on 15-minute charts?
The definition of a candlestick signal is the graphic depiction of everybody buying and selling during a specific time frame. That time frame could be 1 minute, 5 minute, 10 minute, whatever time frame you want to be trading. The indicators are what I guess they call fractal. This could be a 10-minute chart. This could be a 1 minute chart. This could be a weekly chart. The indicators are all exactly the same.
They're all the same. Okay.
Yeah. So here's a situation where, again, you can get a power trade based upon adding everything up in your visual analysis. There's our left-right combo, a doji followed by a bullish engulfing signal, one of your strongest candlestick reversal signals. And look where it's occurring, right smack dab on the 50, with stochastics down in the oversold area, followed by a gap up the next day. Anytime you see a candlestick signal that's telling you that there's a reversal, and they gap it up, not only does it tell you they've reversed it, but they're trying to get back into that trade with great enthusiasm. And that's exactly where we want to be, in an oversold situation with a strong buy signal followed by gap up confirmation. Now the trade becomes very simple. You just stay long as it stays above the T line. So we can enhance the patterns. Like a J-hook pattern can be enhanced by what we call the bobble pattern. A J-hook pattern is when they take it up, they pull it back and do a J-hook. Now, that's a very productive pattern in candlestick analysis, but it's even more enhanced by the fact that we can see where it failed right here at the 200-day moving average. And then it pulled back to the T line, which we saw where was our bullish harami telling us the selling had stopped. We could be buying here, knowing that as soon as we're buying it and it's breaking out through this level, it's confirming our J-hook pattern, and we've got another wave to the upside. It just enhances the probabilities that that pattern is going to work, because there's two elements on these moving averages. One, everybody has the 200 on their chart. So they're watching to see what's happening at the 200. Nobody has the T line on their chart. So when we see this supporting right here, we're getting ready to either be buying here, knowing that it could come back up and test this level, or buying here immediately, knowing that this pattern breakout is confirming and we're getting in ahead of everybody else. So anytime we see that situation, it could be a bearish pattern, like a bearish J-hook. Notice how when they came down through the 200, they couldn't get back up through the 200 or the T line and failed. What'd that tell us about our next price move? It's probably moving this magnitude as the same magnitude as this move right here. So all these things can be visually recognized by knowing what happens in human nature at support and resistance level. This is a very predominant pattern, which we call the blue ice failure. The blue ice failure was named by my late friend Dave Elliott of Wall Street Teachers. Said somebody fell through the ice. What do? They come up and try to find the hole they fell through. When they can't find it, they drown. Where do? They go to the bottom of the pond. Oh, Raleigh, I have to tell this, because when Dave and I all go around the country years ago showing our systems, I would always help his people, by telling them the story that they could remember the blue ice failure is, how do you catch a polar bear? You cut a big hole in the ice. Then you take a can of peas and you spread it around the hole. And when the polar bear comes down to take a pee, you kick him in the ice hole. Now, it wasn't a real technical explanation, but people remembered the blue ice failure.
There you go.
So anytime we see this setup, we know it's fallen through the ice, it's come back up, and we can see the sell signals. There's a doji, spinning top, and then a gap down. Where's our probabilities? Our probabilities are pretty strong. They're bringing it down here to the 200-day moving average. So this is what we call convergence analysis. This is what creates the power trades, is multiple confirmations. So if we see something like this, there's our bullish engulfing signal in the oversold area, followed by a doji sandwich. And what do we imply from a doji sandwich? Well, first of all, the bullish engulfing was a reversal signal. The doji sandwich tells us there's going to be more upside. If there's more upside and it opens positive, what's it tell us about the T line? The T line's not acting as a resistance anymore. And if it's doing this and we can see there's a relatively flat handle over here. That tells us we've got a scoop pattern. And what do we expect coming out of a scoop pattern? This slingshot effect to the upside. So again, this puts us in situations where the probabilities now become greatly improved. So not only are we in a positive trade, but we're going to be in a positive trade that has excessive profitability to it. Same thing here. Look at our little hammer doji harami telling us the selling had stopped. And where did it tell us the selling had stopped? Where everybody was watching at the 50-day moving average. When it opened positive the next day, that told us we had a best friend with stochastics coming out of the oversold area and a close above the T line. If we didn't see it on this day, very simple scanning techniques show us that signal that night, which puts us into our trade setup. But if it opened positive the next day, we could be buying, because look at all the parameters that we saw. A best friend signal bouncing off the 50, stochastics coming up out of the oversold area. They broke the T line and they broke this downtrend. How long do we stay long? As long as we stay above the T line. So again, this is, we'll look at this right here and say, well, there's 4 different reasons to be in this one. So anytime we see that type of setup, again, we're watching to see what's happening at a support level. We start seeing buying. We can see there's a little flat handle. There's our spinning top, bullish confirmation, close above the T line, followed by a doji sandwich. We stay long until we see a sell signal, and or we start seeing we're moving too far away from the T line, getting ready to take profits. So breakout enhancements are based upon a candlestick signal. And this is what we have applied to our trade. And it used to be that people say, well, don't you care about fundamentals? And I would come back and say, no, because the fundamentals are already built into the candlestick signal. That's everybody's decisions based upon their fundamental research of whether they want to be buying or selling that position. We don't need the fundamentals. However, there's some very strong sectors. One of the sectors is the electric vehicle sector, which will probably be strong for the next few years. And the biotech sector, where people are always coming up, or I say people, companies are always coming up with new technology or new medicines. So how do we know whether that new move is going to be substantiated? This is what we call research analysis, reverse engineering. We go back, and when we see that breakout, we go back and say, all right, was that news that created this move something that's going to last, or is this just a breakout type situation that may not last? If it's something that says this company's got further prospects, that gives us that much more incentive to be buying that position coming out of a fry pan bottom. So we did that by accident. I was demonstrating to my brother one day. He said, well, how can we find the big moves? I need to make some big money. And I said, well, you can easily scan and find which stocks are moving. And we noticed OCGN, had no idea what this company did, but you can see prior to that, it was just flat. And all of a sudden, it was trading positive. So the first thing we did was go back and see why it was trading positive. Turns out this one had a vaccine for COVID that was approved over in India, which meant they could get approval over here. So we started buying at it went from 15 cents to 73 cents. But why were we buying? Because it told us there was probably more upside. And the same scenario happened over here, another positive announcement. So this is what creates the probabilities of two things. One, you can witness when there's been a change of investor sentiment, and then you go back and you evaluate whether that news that created that move is going to be substantiated. Eventually, we got out at 1773 on that trade. So it wasn't like we were any brilliant traders. This just told us when this alert occurred, go back and see what caused it. And the next day it popped right up to 278 in that area. So it tripled. So anytime we see something like this, when it was trading right here, and we did a simple scan and saw that this was a kicker signal, we went ahead and bought it. Now, I know, who was it? Eric said you don't want to see trades that have already occurred and say, hey, you should have bought this. We're trying to illustrate that the candlestick signals tell us when to be buying, not because we're going to be getting into a huge trade. The benefit of candlestick analysis is that it allows us to get into positions where the probabilities of being in big price moves are extremely strong. So when this was trading at $2.90, we have identified the kicker signal breaking out of this level, and we used our rare process, which was went back and investigated what the news was that created it. In this case, they had a approval from the FDA on something that would help blind people get their vision back. So did we expect it to go like this? Definitely not. We would have been happier than pigs in doo-doo if it had just gone like this for a few days. But again, that puts you in situations where the probabilities put you in great probabilities of being in the right place. So took some profits that day because look what the 10-minute chart was telling you. Look how far away you were from the 10-minute T line as the stock was way above the daily T line. So started taking profits in here, and then we bought back later. So this is not rocket science. This is just taking common sense information that if we see a breakout, we go and we see what that news was to put us in a situation where that information might have a lot more upside to it. Did that quite a few times. AVXL, checked what the news was here. We were buying, and you could see in 4 days that was up bigger. Now, do we always get into a situation and have huge price moves? Definitely not. But again, the probabilities of being in these trades are essentially what the basis of candlestick analysis is, identifying when there's been a major change of investor sentiment. I always tell people, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And so we want to see what, if there's been a change, what the perception of those fundamentals are. A lot of people in the chat room have been in CCIV when it broke out. Had a nice run. And how long did you hold on to this? As long as it stayed above the T line. Just a bunch that if you see the pattern setting up and you see a breakout and you just go back and analyze the news to see whether there's going to be more upside, the higher the probability you're going to be in a strong trade. Or if you see everything setting up, look at your Morningstar signal, look at your doji sandwich, look at your handle. Told you they're probably in a slingshot effect to the upside. So when you add all this together, it's not like you have to analyze. You can see all this basically in one visual glance, all the things that are showing up as positive reasons to be in that trade. So this is what we call 2 + 2. If this was where the breakout was likely to occur on a J-hook pattern, and we can see it did a doji right at that level, we have the doji rule, which is very simple. The price is usually going to move in the direction how they open after a doji. The fact that it opened positive, remember, we're buying the signals when we're in the oversold area. We're buying pattern breakouts, usually when the stochastics are telling us we're up in the overbought area. So as soon as that opened positive and started trading positive, what could we analyze on that chart immediately? First of all, the doji rule said it was probably going to trade positive. Secondly, it could be a doji sandwich where this candle right here was going to be the same as this right here. which told us immediately that this level right here was not acting as resistance. We had a high probability we're going into wave 3 of this J-hook pattern. So here's the analysis that kind of produces common sense using candlestick signals. If you just learn the 12 major signals, that alone, no matter what trading program you're using, if you use candlestick charts and know what the signals are telling you, you're going to have a much more advantageous analysis of whether somebody's recommendation or trading pattern is working because of the information built into the candlestick signals. The patterns are based upon high probability results of what human nature does time after time. And then you can combine those two in what we call the top rank signals and patterns. And those are situations like the best friend signal, which is a doji followed by a gap up, or a left-right combo, which is a doji followed by a bullish engulfing signal. And you start adding those on a fry pan bottom breakout, you're adding all that information together to give you the power trades. So the signals themselves tell you with a high degree of probability what's happening in investor sentiment. Then when you start adding signal and pattern enhancements like the T-line, the moving averages, the doji rule, the different patterns like the doji sandwich, trend kickers, things that would imply with a strong probability that the prices are going to continue to move higher or lower depending on whether they're bullish or bearish. And so this is the one that if you don't get anything else out of this session, that the T-line is such an extremely high probability indicator that when you're applying it to the candlestick charts, you're not only improving your probabilities of being in the right trades at the right time, but you're also taking the bugaboo that I always had was my own emotions. You can take the emotions out of your trading with great probabilities, because all you have to do is use the simple T-line rule that as long as that trade stays above the T-line, even though you might see some prospective candlestick reversal signals, if it doesn't close below the T-line, you stay long. So this is a process that on any given day, that if you do simple scans, and the scanning techniques for candlesticks is very simple. Once you put in the formulas, which are all over our website, you can do scans in a matter of minutes each afternoon. I tell people if you're not familiar with candlesticks and learning, it may take you 20 minutes to find the best trade setups for the next day. If you know what you're looking at, maybe it takes 7 or 8 minutes. But the results will be that you're finding extremely high probability trade setups because of human nature. And that's where you can use these confirming indicators to improve the probabilities of being in the right trade. So with that, I guess our special is a package. We don't have the prices on here, but the package is $497 for about $800 worth of information on the T-line, where you can use it for your reversals, for maintaining your positions, as long as the trend continues above or below the T-line, how you can use it for identifying when a pattern is setting up, like the fry pan bottom breakout or the J-hook pattern, or things that don't even have patterns to them, like the T-line crunch, where the T-line doesn't let the price, or the price doesn't close below the T-line, and it keeps pushing up into a resistance level, telling you there's a strong probability they're going to break out through that level. So that's all on www.westmarktrading.com/Bigalow. So with that, are there any questions out there that I can answer?
Sure. Hey, Steve. There are several questions that came in. One of the questions was interesting when you were doing your scanning, and the question was, does the Metastock scan, how does the Metastock scanning work? Is it searching for your patterns?
Yes, they're already built in. The formulas are already built in. So metastock scanning, if you just put those formulas into the your program, that each night, if you refresh your program, it will pull up all the kicker signals if you're using the kicker signal formula, or your best friend signals. So you can either use it that way, or let's say you're looking at Apple and you say, well, should I be buying? Well, it will show right on the screen if there is a signal. And not only do they show you the signal, but you will see over at the right-hand side of the screen, it will describe what that signal is and tell you what the results should be from it. So all that is built into pre-existing formulas. All you do is add them to your scans, and all you do is refresh each night, and it will find your list of kicker signals. Now, I say your list of kicker signals. On any given day, you might only have, if you're lucky, 3 or 4 kicker signals. So it's not like you're having to go through a huge list of signal identification.
Sure.
Steve,
Okay.
if I will, one of our sponsors is Metastock, and Steve has his proprietary indicators already set on Metastock systems. So I'm going to drop a link in there for folks to take a look at, and that has each of his exclusive unique candle patterns.
All right. Another question that came up here. So does Steve always trade inexpensive stocks for his method to work?
No. No, those are the ones that I illustrated. Just happened to be very inexpensive. They work just as well if I was going to buy Apple or Amazon. The candlestick signals work for any trading indicator or any trading entity, whether it's stocks, bonds, currencies, commodities, tulip bulbs, anything that has fear and greed in it. Candlestick signals work. Forex. So you can use it for whatever trading, when I say universe. My trading universe is stocks greater than 5 and trading more than 200,000 shares a day. That takes the 9,500 trading entities down to about 3,000. And all I have to do is hit my refresh button on my screen, and in 30 seconds it's refreshed, and it's going to show me the stocks that had the biggest percent price move today. And probably within the first 20 charts, I'm going to find 4 or 5 good candlestick reversal signals. And again, it could be on a $400 stock or anything above 5. But
Sure.
that doesn't eliminate that if you're trading penny stocks, it works just as well. Remember, it's just a graphic depiction of what's happening in human nature, no matter what the price of the trading entity is.
Sure. Another question. PG says, can we get a set of these rules in the chart setup? That's probably what's included in your course here, isn't it, Steve?
Oh yeah, on the especially on the for the T line, it's going to show you the signals. And again, a lot of people in our chat room say, "Oh, there's a nice signal here. Should I buy it?" And we look at it, and it's trading just below the T line. The answer is, why not improve your probabilities and wait to see if it closes or opens above the T line tomorrow? And so that gets rid of this, well, let's say how to state it. That kind of changes the probabilities. You may be a little bit late, but your probabilities are extremely stronger that you're now in a bullish trade. So I always tell people, we're not trying to buy at the absolute bottom, and we're not trying to sell at the absolute top. We're trying to get that high probability trade in the middle, where instead of trying to maximize your profitability on a specific trade, you're trying to maximize your profitability for your account, which means if you can improve your correct trade ratio by buying a position that you can see is confirming, the higher that trade ratio is, the bigger your compounding effect will be for your account.
Sure.
I always tell people, before candlesticks came along, I was the worst investor in the world. And I was a stockbroker for 8 years. And I got out of the business because I realized that brokerage firms had no more ideas about what makes prices go up or down than the man on the moon. And when somebody threw candlesticks on my desk many decades ago, I thought anything sophisticated sounding as candlesticks wasn't worth the time and effort. But they kept badgering me. It was kind of antiquated information. So I looked at it, and the more I looked at it, I said, the more this makes sense. And I kept studying it, and it made more and more sense. And so I started using it. And instead of being a consistent contributor to the market, I was now a consistent contractor, I guess, from the market. I know that every time I put on a trade, the probabilities are greatly in my favor that I'm going to be making money with that trade. And on the other side of that is, not only does the candlestick signals tell you when to get in, but they also tell you when to get out. So not every trade you put on is going to be a correct trade. The candlestick chart will show you immediately. And that's that old philosophy that everybody is told time after time, that you cut your losses short and let your profits run. But nobody ever tells you how you cut your losses short and let your profits run. Well, using the graphics of candlesticks makes that very easy. Go ahead, Raleigh. I didn't mean to.
Yeah, no, it's great. Steve, you're covering so many points there. Juan asked a question. He says, Stephen, do you consider volume when you take a look at your patterns as one of your confirming signals?
No, not as a confirming signal. No, I should restate that. First of all, volume is already taken out of the equation because I've already scanned for stocks that are trading a volume that I know I can get in and out of easily. But volume on the day that you see a reversal signal, I mean, if you see a big volume spike, either that day, the day before, or the day after, the assumption is that there's been a major change of ownership. And usually that change of ownership is the smart money buying, panic buying at the bottom, or the smart money selling into the exuberant buying at the top. But it's not a major factor. A lot of people say, well, I want to see the volume go up as the price goes up. Volume and price have absolutely nothing to do with each other. If there's a stock moving up and nobody's willing to sell it, it's going to go up on lower volume. So the only time volume becomes a added fluff is when you see a big volume spike at a reversal.
Okay. And Steve, I mean, natural that this question would come up, which is when you consider that there are a number of candlestick patterns that are tradable, do you have favorites? I mean, when you're looking at the market, is there a particular setup or 2 or 3 setups that makes you lick your chops?
There's 4. I tell people we've got about 18. By the time you have the 12 major signals, now everybody should learn the 12 major signals. And there's only 6 longs and 6 shorts. And that is your bread and butter, the building blocks of candlesticks. Then you've got 6 or 8 extremely good patterns. And then there's about 18 what we call top rank signals and patterns, which is the combination of those signals and patterns. And I tell people, a lot of people ask that same question. If there's so many of them, how do you keep track of them all? Or how do you learn them all? I tell people you don't have to. You pick out 3 or 4 and learn them extremely well. Because with those 3 or 4, you will always have more trades than you'll ever be able to handle. And now you've got control of your own investing decisions instead of being reactive to the market. You're being proactive. You know when to get in and when to get out based upon what the market's doing and what the investor sentiment is doing in that particular trade. Now I forgot the question. Oh, before the kicker signal.
Your favorite signals.
Yep. The kicker signal is a dramatic change of investor sentiment. It's an extremely high probability reversal that if they gap it up above the previous day's open and continue to trade it higher, there's been a drastic change. That's probably your most strongest individual candlestick signal, whether it's bullish or bearish. Now, after that, you've got things like your best friend signal, which is a doji followed by a gap up. If that's occurring in the oversold area and they gap it up and close it above the T line, that's an extremely high probability trade. Not only that it's going to move in the right direction, but the magnitude of the move will be extremely strong. I'd put the left-right combo in there also. And I would put fry pan bottom breakouts. So if I just use those four and became an expert at those four, I'd still learn the other signals and patterns, but I wouldn't have to be an expert at them. I just know to recognize them to see how that would fit into maybe identifying a breakout of some sort.
Sure. Steve, you had mentioned earlier that, and Pat had put the link in there that that your patterns and things are part of the Metastock package, so you could scan for those things. Are there other platforms that also have your signals and patterns and things set up?
Oh, I think the formulas are all on the TC 2000. I know that TradeStation was working on them. I don't
Okay.
know whatever happened to that schedule. And they are on Thinkorswim. But what I have been finding out that unless you want to spend a lot of time setting up your scans on your trading platform, you'll do all right. But if you spend just $30, $40, $50 a month on a scanning software like TC 2000 or Metastock, because they're oriented more toward the scanning,
Sure.
they're going to be a lot faster, a lot easier to work with, and probably save you tons of time slash money if you figure time's worth something, using actually a scanning software. So, and I don't have any preference. I like Metastock because it's got all the feeds that you want, whether you're trading commodities or future or currencies. It's got everything on there, whether you're trading Asian stocks, Canadian stocks, whereas something like TC 2000 is very easy to use, but you're limited mostly to US stocks.
Okay. So that's a good point, Steve. You know, scanning software like that is a companion piece to what you've got going on. So you can use the scanning software to scan to see what setups are there, and then go to your favorite platform for however you want to place the trades.
Exactly.
All right. Well, Steve, I think that pretty much wraps things up for today. Great presentation as usual. Lots of interest in the T line. And folks, many of you asked the questions about, so what's the blue line, the red line, the T line? The T line is an 8-period exponential moving average. You can plot it on any chart that's out there. And as Steven said, even though you see stochastics and other things there, he could wipe all that off of his charts, and he could just trade with the black line with the T line on it. And understanding the candlestick patterns that basically are the precursor to the setups that he likes to trade, he's got everything that he needs.
Exactly. And the most predominant element of the candlestick signals is the signals themselves. Everything else is just a confirming indicator. And the T line is probably, I've used every indicator you can think of over the last 40 years. The T line is the most effective that I've come across. And the probabilities that if you see something pull back right to the T line and they take it back up, they're not trading it below the T line. Your next trade is setting up for you.
All right, buddy. Steven, thank you so much. Have a great day, a great rest of your week. I know you're a busy guy. We're delighted to have you with us here.
Great. Thank you for having me.
All right, folks. That was Steven Bigalow. And once again, he has made a huge career out of using candlesticks and his patterns to trade the markets. And his special offer here is for what he calls the triple T trading strategies. And that will include the techniques for timing the best trade entries, many of which he covered in the presentation here, how to spot and profit from the T line crunch, and also how to trade the fry pan bottom and slow curve for big gains in the market. You can go to special link westmarktrading.com/Bigalow, and you can check out that special offer, which once again covers many of the things that Steven just covered in his presentation. And so with that, we are a little bit ahead of time, which is not necessarily a bad thing. And